All right, good morning and good afternoon, good evening from wherever you're connected from. So basically, we are going to go into the component of PBX market scanner and scanning for A plus signals, top-down scanning, so that you don't just jump into the market. But before that, I want to give a brief intro to simple trading routines, trading plan. So just understand, please, I want to beg everybody. One of the things that make us not to be consistent in profit is when we don't have a plan. So plan is all about major thing on plan is what we call position sizing. So those of us who are new, for the purpose of those of us who are new, position sizing. Even some of us who have been trading, we are guilty of position sizing. So we trade, sporadically without actually having step. Check account you are intentional about, and account you just do anyhow. All right. So you see that. So you can trade maybe if you are if you are building sorry, if you are trading with prop firm that is pay later, you can trade anyhow, but it will still affect you too when you get to the live account. So position sizing is the first thing that very important you must understand. So you have told yourself, what my position sizing? That's how much I want to be put into the market. That's what I mean by position sizing. Please, for those of us who are new, and I'm doing this, even those of us who are old, maybe if it's been twice, we can understand why position sizing is very important. All right. Position sizing is very important. And then timing, times of times of retrieve. Okay, time before retrieve or lost time, lost times before retrieve. Okay, okay, or just before stop. So now you have to say, okay, if I lose back to back this number of time, no trading again for that day or for that period. So you want to get all of those things. That's all the being about position sizing. It's very, very important. So you have to understand it. Okay. So then number two, structure and trend. Now, you don't need to know too much higher, low. You just want to have an idea what is the trend of the market. All right. You just want to know what's the trend of market. I will advise us work with these two time frame. Especially if you are, you know, day trader, day trader, intraday trader. So work with this time frame more. Okay. 4 hours and 1 hour. Please take note. We want to get very perfect optimum you maximization of your trading, especially using your scanner. Please understand structure and trend. Work more with 4 hours and 1 hour. So take note of that. So 1 hour, 4 hours is very important. All right. Then buy and sell. So let's look at it before we explain the component. Now, so this is, these are commodities, they have character. What drive them is not only structure, it's not market structure that drive these guys, it's fundamentals. So we probably will not have the structure you're looking for on this guy. So let's look at Bitcoin. Okay, so look at Bitcoin, even gold or whatever. So let's look at Bitcoin, for instance. So here is Bitcoin. So quickly, let's look at Bitcoin. Here is Bitcoin. So remember, I'll say on structure, let's work on 4 hours and 1 hour. It's going to help us a lot. Okay, let's look at 4 hours and 1 hour. So what do you mean by structure? Those of us who are new, and so you don't need to know it and all of that, but you should have an idea. So it's going to help a lot. It's going to help a lot. So 4 hours and 1 hour. When you're able to see a nice structure on 4 hours and 1 hour, you probably want to stay in that particular pairs. So do more of staying in a pair that form a nice structure, all right, and have a very nice trend. A trend you can look within 20 seconds, you can see the trend. So a trend you can see within 20 seconds or less than 20 seconds, you can see that this is an uptrend or downtrend. So that's going to help you to make a lot of proper use and A plus setup for your market. So 4 hours, 1 hour, make sure you have much of that. So what do you mean by trend and structure? Structure is the movement, while the trend is the direction. Okay. So I just have to do this. So that's those of us who are basically newbie, and so it's very important. Please, it's very, very important. Don't miss it for anything. It's very important. And now the joy we're having is that if you look at it now, mostly some of those instruments we're trading, they are, they have some things in common that you can actually pick. So first of all, I have disciplined myself. You have to ask yourself this question: have I disciplined myself to actually trade? Right? This is consistency in my trading so that you reduce the stress of yourself. Then you can now work with the other side, like to talk about the structure. So make sure you're always looking for 4 hours and 1 hour. And that's the help of scanner for you. So we have not explained the scanner component now. We're just looking at some of the prerequisites that will help you to maximize your trade. It's very important. Okay. Now, buy and sell. So Fibonacci tool and national footprint are very important. Now, do I actually need to know how to plot Fibonacci tool? Maybe not. Maybe yes. If I do, it give me an edge. So if I'm confused at a point in time, I can plot it. And that's why I would say these are prerequisites. Oh, maybe yes, maybe no. Okay. So if I need to know, there are very fundamental thing about the Fibonacci retracement if you want to work based on standard. Okay. If you want to work big on standard and then enjoy your scanner very well. Now, so what about Fibonacci? Now you will see an alignment. So that gives you a confluence, an alignment of your trade with your Fibonacci retracement. So it's going to help you to actually identify some places that with confidence you want to take a trade as much as possible. So now I'm not trying to define what Fibonacci is. It's not necessary. You just need to know what is it used for. And that's why I'm talking about the buy and the sell. Anytime you think of buy and sell, think about Fibonacci retracement. Why? So that you know where to actually buy appropriately. However, so by your structure, and then this is going to help us. Okay. Now I'm going to do just a little experiment of Fibonacci, right? And then that can help. Now, the effect of when Fibonacci does not get to the normal play or to get to where it creates issues is the fact that the market may not travel well that it's supposed to travel. So if I have understood structure, that structure of the market, that's where the market move up or down, it means where the market move from is the source of the structure and where they get down to, right? So like this now, this is a break of structure. Now your scanner actually have given all of these things to help you where you hit a high, low, high, low. So these are the internal structure. So okay, high, this isn't break. So this is high, low. So with that, you're able to look at, okay, where am I going to take trade from? So buy and sell. If you have an idea of your Fibonacci, it makes a lot of sense. So for instance, if structure, structure is what give birth to trend. Okay, structure is what give birth to trend. But there's some exceptionality. That's the edge you have when you are trading gold with your scanner. The edge you have is that irrespective of the trend, if you understand your scanner perfectly, you will trade any trend either sideways, right? Either sideways trend or downtrend, uptrend. You will trade any trend, but you will overstress yourself some time while trying to trade some trend that are choppy. But if it's gold and Bitcoin, you can take anything, you can see any money to pick on them. So that's for the structure and the Fibonacci. So for instance, there are a few things I will explain about Fibonacci that will give you clarification. So let me take this what we call Fibonacci, right? Now, I have my own segment of Fibonacci. I use percentage. Let me just quickly do something on it, and so that can help us. So I use, let's go there. So let's look at the level. So I'm going to make it thicker, okay? Okay, okay, okay. A little thicker. Where are you? Okay, okay. So there we go. Um, Okay, so now let's quickly look at my Fibonacci. So this is what I do. You can snap it, and I will explain how I do my own Fibonacci. Now, what I do with my Fibonacci is very simple. I don't use the general formula, okay? I don't use the general formula. Now, the component of my Fibonacci, you can snap it. It's like this. Fibonacci is to measure from 100 to 0 or 0 to 100. Now, that's why I say understanding market structure will help you too. So if that's the case, most of your Fibonacci will not have this minus 23, minus 50. If you can be patient and wait for market to appropriate point when it comes there, the next hitting point you are going to have is going to break, even by spike, or sorry, by sweep of liquidity, it always touched the 23. So this 23 I added as negative is Fibonacci extension. I don't go to now start plotting Fibonacci extension. So when I enter the trade at the appropriate point, my first take profit is usually at the 21, 23 minus, and then 50 minus. And so when I don't even waste time or probably setting it, or I will stale my market to that point, making this year into back trailing into that point. So the Fibonacci is about buy and sell. So if you want to really understand buy and sell, you must understand the Fibonacci. And why is the Fibonacci? Why do I understand? So you see my own Fibonacci here. I remove 38. I don't use 38. Now, for you to use 38, it has to be extremely trend that has very fantastic continuation. So 38 and 24 usually come to a single candle, a single opposing candle. That's where normally come to. So as for buy and sell, I need to see it come down to what's it called? The 50. All right. I need to see it come down to 50. Now, any trade that get to 50, that's the equilibrium. All right. And 60 and 78 or 79, they are powerful. 50 is actually the equilibrium. 50 to 60 is actually the golden ratio. Then why the OTE is from 61 to 60, just a moment. Okay, I promise not to complicate this training. Okay, so for that, any of the retracement that come to perhaps any of the retracement that come to at least 50, let's call it 50 or 60, right? 50 or 60 or 70 something, they make more sense. All right, so just like this now, this make more sense. So the travel will be very, very powerful like this. All right. So when it come to, because this is the swing low, yeah, this is a sweep. This is the highest. All right. So let's just take this kind of off first so that you can see what is showing here. Okay. So this is it. So from the low here to this high here, all of these are internal structure. You can see that what I say, when I take an entry, the more extreme it comes to, right? The more extreme it comes to, the better the travel. Okay, and then it will go very well. 23, 50 is usually my own most place I'm going to, expecting the market to get to that point. So you don't need to know too much detail, just to have an idea and supporting tools about it for Fibonacci. So why do we say for buy, for sell? Fibonacci tells you you are told to wait for a market to be bought at a discount instead of no customer want to buy at a premium price. So they want to buy at a discount level. So with the discount price they want to buy, so they wait for it there. All right. So then, if they want to sell, they want to sell at premium. So that if it has to do with buy and sell, you need to understand the rules of discount and premium to buy. Okay. So that's, for instance, the issues about the Fibonacci. So for buy, I'm buying in at the discount, anything below 50. Then you see some persons, what they do, that's where patience is very important. Some persons, when they come here, they buy. You see why they stack more position. Some of us don't stack positions, or we stack position blindly. Some of them, when the market come here, when it go to lower time frame, they will have been bought and buy more. When the market return back here, you're afraid. But him, he's going to, because his stop loss definitely is below the 78. So he's still going to put probably his stop loss, somewhere here. For somebody who know what he's doing and probably give a buffer. So you can now see your scanner give you to say, there was a swing point, this was a swing point, say, hey, you know what? Your stop loss, anything you are buying inside this region, your stop loss supposed to go below this. When you are picking the stop loss below this, you see another support here. You see, the market can actually sweep this liquidity, and then, but he has gotten a one that is swept here. If it's gold, he will come back to sweep this one. And so your stop loss supposed to be below this. So that's a buffer. So anything that make the market to cross all of this, then that means going to be selling. That's one of the things about the Fibonacci. So we'll just show you how to plot it. You take from, that's where you need to understand the structure, market structure, whereby a low, a high. So look at this. This is a high. This is a high. So this one is higher, but no structure was broken. That means this trend, this structure here from low down, this is the structure that was broken, right? This was the structure that was broken. So this one was broken here. So this was broken. And so here, you want to return back to the origin that caused this. And then there are so many areas that the market will come to. So that's one of the wonderful things about Fibonacci retracement. It's not used anyhow, or somebody, even whatever thing they want, or say, oh, Fibonacci, I put it, come to 23, 24. Those ones, it doesn't repeat and it will be strong. Okay, so now let's quickly go into, so that is, anytime I want to buy, you want to think about the discount and the premium. Okay, so that means buy, sell. Why we talk about Fibonacci is for discount and premium. So discount and what's premium? Discount and premium. So that means we sell from discount and we buy from discount and sell from premium. Now, exit point. So this is the final thing I'm going to discuss, and I will explain the component of the scanner. So exit point, please understand, exit point are sell, stop loss, and TP. That's exit point. So the next question you want to ask, if I buy, if I sell, where are my exit point? Your exit point are sell, stop loss, and take profit. So that's why you first of all find where is your stop loss. In fact, it is your stop loss that will determine where your take profit will be. So if I'm going to look for the market and I cannot have 1:2 risk reward in that trade, I will not enter it because I didn't have proper exit point. So take note, please. Every time you cannot have a proper exit point, don't enter that market. Okay? So exit point are both stop loss and take profit. Ladies and gentlemen, if you cannot think about this, I'm sorry, you are abusing everything. So you are going to be worn out under stress. Okay? You are going to be worn out under stress. So for those of us who are new, just feel I've explained. If you have any question, please just put up your hand so that I clarify you quickly so that we go to the component of PBX market scanners and of course, scanning for A plus signals. And I promise you, we're not going back to this basic because we want to trade together with the scanner today, Wednesday, and Friday. So you practice it again and again and again. So what makes trade sweet is when you find a repeated pattern that can be obvious and can be repeated. So sometimes if that pattern repeats just twice and you are lucky to be there, take it and respect yourself. That can discipline you. And most of us disobey some of those rules and then we now have some bad trade and all of that. So if you have any question, please, on what we have not discussed about trading plan, position sizing, I have this, I'm going to send to you. I'm going to send this to you. I think I'll send it to that group. You copy, after this training, that group is going to be dissolved. So you have to understand, except otherwise, because I have told us, I say, if you give any man a rifle and is the man that's not ready to understand how the rifle is being used, now you are just giving a rifle that's going to kill himself with that rifle. That's it. He's going to kill himself with that rifle. So that's why they say if you don't train them, you don't blame them. Okay. So do you have any question? You have any question in just what we have discussed now? Anyone, if you have any question. So I'm going to send you this. That will help you for position sizing. Practice it and help yourself. So because when we go to the trading now, we're going to use this for position sizing, just to discipline yourself, to know, when and how many lot size am I going to use and all of that. Okay, so we do not have a question. It's clear enough, right? So if it's quite clear enough, so I'm going to move to the component. And as relates to what we have just learned from this basic now. So I'm going to go to the component. So when you understand the component very well and the validity of what we call the A plus signal, that's going to vary. powerful. So let's go to the component of this scanner. All right. Let's go to the component of this scanner. It's very, very important. Okay. So that will help us. Okay. So now remember what we said is that we told you that the prerequisite of this, you need to understand basic thing about trading plan. Is your business. You need to know what am I exposing to the market. You need to understand structure. And I say on your structure, please always look at 4 hours and 1 hour. There are exceptional time, though, especially gold and Bitcoin, that you come down to 30 minutes, 15 minutes, and I'm going to tell you some of those trades you took on those points, you don't stay on them. Okay, you don't stay on them. You just make it quick one, you go. Maybe you come to the market and you didn't find any proper setup that's going to give you joy among your instrument. Then you want to okay, let me step down. It's only on gold and Bitcoin or some of those indices. So that's okay, let me just go to 15 minutes. And let me go to 30 minutes. Let me go to 15 minutes. But you discover that when any trade you take on 30 minutes, their strength of travel will be very, very short. So they wouldn't have a long span. All right. So, but if you're on 4 hours, on the 1 hour, you can see the long span. Look at this here, for instance. Here, this is a long span. If you look at this long span, if you go back to 15 minutes now, you're going to see this was enough for you to make money for the day on this. That's why 4 hours is powerful. Then this is a very good for the day and even to the following day for you to make money. So it's very, very important so that you can understand. Now, so if I leave that and go to 1 hour, you are going to find similar, but may not be too powerful. Okay. But depending on the instrument, however, okay, depending on the instrument, however. So you can see all of these are internal structure. So you're going to find a different segment of your structure as it were. So, but I just like to let you know about, so 4 hours, the most powerful for you, all right? But it requires your level of patience. So your patience is required, for 4 hours and all of that. So this is gold, for instance. So there's going to be a time that the trend will confuse you, but nevertheless, when you work with your scanner, you're going to enjoy your trade and then pick trade as if you are not trading. That's the truth. You are going to trade as if you're not trading. So you'll be looking at yourself, okay, oh, this is the trade, this is what I'm supposed to do, and all of that. When it comes to stuff like this, they are exceptional. So you have to be very careful about them. And so, like I was sharing the other day, I say there is nothing should make you to look for sell on this because they are not controlled by these the market structure per se. They are controlled by fundamentals, right? And I told us you will continue to buy. You will continue to buy. So you now know what to do. In such case, you are looking for a little pullback and then look for an entry, look for a little pullback and look for an entry, look for a little pullback and look for an entry and all of that. So that's one of the important aspects you must pay attention to as much as possible, so that you will not get yourself entangled in the market. So let's quickly go to our scanner. So let me start from the scanner. So the component of our scanners. So you can take note of the component. The component of our scanners. We have two combined scanners here. One take care of basic foundation. The basic foundation one takes care of is, so normally when you install this scanner into your trading view, right? When you install this scanner into your trading view, there are some you will not see. So I'll take them off so that you see the way it looks like. So this is what you are going to see. So this is the basic foundation of the scanner. And that's ordinarily for experienced trader will trade with it. But even if you're an experienced trader, if you have something that simplify and reduce stress for you, you will love it. You wouldn't want to overstress yourself. That's the truth. So this is the basic foundation of the scanner. Can you see that? Very, very foundation of the scanner, right? Which has to do with basic things. What are the basic things? Number one, we call it key level. All right. So all these lines, somebody was asking me, what's this yellow line? It plot itself. Somebody said it come out once in a while. It come out once in a while because the market is still within a region of a structure. And now, so what happened to that area? The area is this. It just helping you to delineate an important key level area, which is the support and resistance, or what we call demand and supply. So if it's demand, if it is a supply invariably mean resistance. Okay, so when you plot your scanner, what you are going to see are the demand and supply. Yes. the demand and the supply. So now, ordinarily, for some of us who have been trading, you always understand what demand represent and what supply represent. What demand actually represent? Demand is a place where there are more orders, a buy orders or some level of buying orders. And demand actually happen most time that market come to retest into the level of demand because there's a fast move away from a region and then retesting something like this. So this one move away, liquidity, and then with that demand again. Now with this scanner, the thicker, right, the wider and thicker this demand, the stronger that point. So that means for gold, this is a very serious, strong point for gold that the gold should need to travel back up. Though there's so many rejection here. Gold has a lot of volume. So if I pick another instrument, you know how each instrument reacts at each level because of their strength. This is Euro USD. So you see that Euro USD had been within a supply and demand all this while. That's since when? So somebody is going to be struggling with this market of Euro USD since about when? Look at it. This is April beginning, get to the April middle and all of that. All this while, it has been happening at that beginning of May. All right. Beginning of May, we have a sell, we have a buy, we have a sell, truncated, and all of that. If buy is still going on again, so maybe we'll still have some level of rejection. That means for you to really enjoy Euro USD, you probably have to go to a very lower time frame. But definitely, you want to work with a higher time frame first. So the component of this scanner is basically number one, demand and supply. That is support and resistance, number one. Number two, so we cannot add the other ones to it. Number two, it has what we call trend. Okay, so let's go to the trend. It has what we call trend line, or what we call, just to help you to show the market trend. Which trend are we now? So if you're sideways, you can identify it, all right? So this market now, partially uptrend, sideways, and all of that. So because you can see that the market has been doing. So this one is not going to be different from, let's open this one. Okay, so let's see. So these are an uptrend, right? But not as powerful as some market activities and their trend. Okay, this is GBP, sorry, not GBP, sorry. So this one, you can see this one, absolutely. This blue line is 50 moving average. 50 moving average measure, the trend, of in a more medium term and long term. And one of the rules in the market is that the more distant away the price from the 50 moving average, then suspect that we're going to have a pullback into that 50. So when 50 edge it, it bounce again. So know that the moving average, because it's a combination of both 50 and 200. You can plot the two, or if you like, I like my chart to be very neat. Okay, neat and straightforward. I don't want too many things confusing, clouding my screen. I love my screen to be very, very simple and neat and open. And that's one of the things. So because it just helped me. So look at it. So ordinarily for this basic, some of us may find it serious, difficult, because it didn't tell you buy. So most of us are used to say I should buy here. So that's what I want to do. So then the next is structure. So you can see trend and structure, they are together. So the next thing is the structure. So you now click on this like show pivot point. So this pivot point is what gives you the structure. So you see a high, you see a low, you see a low here. All right. If you look at this now, it's still telling you that you see this one, it's still the same structure that got here. Even though you are having all this one, these are like not really a trend. So what is that telling you? Can you see now? That's why the structure, all of this out of structure. That's why you see that your support or demand zone is placed here. Now, none have happened. We have not had a genuine, on this 4-hour time frame, we have not had a real pullback. Yes, a real pullback that is a trend or a swing point. We have not had any swing point from this place. After we broke this, there hasn't been any swing point. All of these are just inducement, and all of that. So there's no swing point. That's why you do not have, the low and all of that. Okay. So, but nevertheless, can I still get trade even with that? Yes, why not? So if you look at it, look at the market. So look at H, look at L, look at another H. So here, So this is the highest. This one is still the same this because this one has not been broken. It's just that it created a loop, internal loop here. So am I going to pick it? No, I pick this one until this one get broken. Then I move down to this point. So this structure, you are seeing the market, the way it's moving is in your scanner. Okay, somebody say, how can I activate the pivot point? I've just showed you now. You just to go to you can double click on your scanner, either this, not the candlestick, just go to your support line, double click it, you come to input, and then you scroll up, you see what? Extras, and see show pivot point. Click on it. It will bring it. Then, if you want to have the 50 moving average or 200 moving average. And if you are the type that love using moving averages, of course, over time, you may love to use it because moving averages are actually good. Yes, they are good. If they are not good, what are they used for? So you don't just trade with it, but you can use to support certain decision. All right. So that will help you. So if we put 200 moving average, you can see the both. So 200 moving average show more stronger uptrend or downtrend. Y50 show the immediate ones and all of that. That's why you see the market first start from there. But you're not trading with it. So people are trading with it. When I say when the market cross 50 moving area, enter. No, it's wrong. Because the structure already, look at the structure here, down here. Then this is a break of structure, whatever. Then we have another one, internal, is not two. So this is the low. Now it created the high here. So since the high was created here, then we have this low. Though eventually for people who are trading on as a swing trader, so it's still going to open the market with the 50 moving average. So if you go to 1 hour, so please pay attention. By the time you are watching this video too, you can get some understanding as much as possible. Just a moment. Okay, so I hope the person who asked a question, how to actually, how to put the trend and structure. Okay, sorry, just a moment. Okay, what's going on? The network? Sorry, let me just refresh it. All right, so sorry, just a moment. Okay, so now those of us who like using moving averages and stuff like that. So this is 200. You can see the way it has been moving over and again. So, but must I always enable it? No, you can. That's why it's flexible. You can always come back and remove it. If you want to remove both, you can remove both and all of that. So, but this is the basic foundation of your structure, as it were. So look at on Bitcoin, on gold, on everything. So you can see gold, for instance. So look at gold. Let's go here. So this is 1 hour time frame. So I say work with your 1 hour time frame and your make more sense and let you see more clarity, than other stuff and all of that. So quickly. So let's go do something very importantly. Because I'm going to give us assignment, and so we're going to participate together and then on the component before we now look at how to now take an A plus in scanning. So this is the foundation of your scanner to help you spot key levels, of course, the trend activities and all of that. So the second of your scanner is down the spot of sniper entry, buy and sell. Okay, so the buy and sell. So this scanner, buy and sell scanner, actually was configured based on the swing point of a trade. Now, some of us miss out of some trade because we don't know the confluence of this trade. And when we get to the aspect of the, what do I call it? The aspect, when we get to the aspect of, the aspect of A plus scanning, then you are going to see the confluences that you see here. So now, this guy called the sniper call or sell, it's very, very significant. It's a repeated pattern but there are clauses you must understand, for applying it. Now, your foundation have shown the support, resistance, yada, 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 and all of that, irrespective of the instrument, been in Bitcoin, been in Euro USD, been in whatever, all right? Either the commodity, whatever. So it has all of those things, okay? So that you can always check to do what you want to do. You can see at a point when the market just get confused, the market is not giving you what you wanted, you will still be trading. You'll still be making money. Okay, you will still be trading, you still be making money. So while others are waiting for this break of structure and all of that, yeah, as much as they are good, but it's important that while you are waiting, you're still finding a trade by following and obeying, your scanner, as it were. So now let's quickly do that and now explain what's your scanner about the sniper call. Now let's work with the sniper call quickly. Now, sniper call only work so much around three major things, like I've explained to some of us before. Now, only work with three major things. Quickly, let me just do that. First, it works with price action. Okay? It works with price action. So we need to understand that. It works with what? Price action. So if you work with price action, so what do we do? Okay. So now, first, every time market, look at it. This is a sell side, this is a buy side liquidity. All right. Every time markets, this is a break of structure. All right. But this is a liquidity. So this is right. So buy side liquidity was taken, then it brought the signal. Number one. Number two, when there is probably because price action, liquidity concept, and smart money. Smart money, like first area, a fair value gap. So I don't want to complicate this. So yours is to master your scanner. Over time, you'll be understanding some of those concepts. So when there's a fair value gap, when your market get there and a swing point occur, you see they give you the buy. Then when your scanner gets to key levels like this was a resistance before, now is support. So look at it. Look at the resistance before. And that was rejected. It give you a sell signal. So understand all of this. So this is a powerful signal. When you see a signal at a key level, it's very powerful. Then until eventually this market, I'm not showing you how we're using it, we're just showing the component. So this one, it come around area of key level, maybe a rejection or sweep of liquidity, because this is a liquidity sweep and rejection at the same time. So that makes it very powerful, two confluences in one place. Now, this is like a support area, right? And it still swept liquidity too. So having swept this liquidity, then it gives a buy. So you can now see that this your pivot point, this your sniper course, move around different pivot point, that's a key levels, and at the same time, a swing point. Now, how to take the signal? We're going to do that, but you have to get this understanding. Now, somebody's asking about the gray. Now, I think you're going to ask the question, but I think interjecting in that, let me just quickly explain. When the market is moving from wherever, and your market is presently seated inside any of the support or resistance, it turns to gray. So that gray shows that market is presently here. Now, don't take any trade. Inside this place, don't take it. Because it's not yet confirmed, it's still struggling under the cloud, except it cross the cloud, retest it, then you can take trade. You can see now you have left this crowd, that's why these have turned to support. You left this cloud, these have turned to resistance. You left this crowd or touching into this cloud, these have turned to resistance. So at this point, this is indecision. So jumping into the market inside this place, you undo yourself. These are the things you need to understand about it. So you can see the foundation of your scanner as support and resistance or demand and supply zone, and at the same time having a trend. So you can see now on 1 hour, you can say this is a downtrend. How? Very simple, even. Liquidity was swept. This is a break of structure here. All right, this is a break of structure here. And then the markets move up and return back to this and create bounce on top of the support. That's you have a lot of opportunity and upper hand to do and make a lot of decision. So market move up here. So this is a high and this is a lower high. So since this high now, this one is a high and this one is a high. This one is lower than this. All right. So that means what we are going to do, that means that this market on 1 hour is still very delicate. Let me tell you why. So I told you about Fibonacci retracement ordinarily. So that means if I take Fibonacci from this point to this point, that means the market could come here. And I have important place that the market come. This is another flow, entire area here. It's another flow. Here was touched a little, but the fair value gap is still obvious there. So that means if I buy gold here, I should be careful here even before getting to this point. So that's why you see the market, when this market get there and is respecting the fair value gap, at the end of the day, we'll print another sell signal. Say, what's wrong with gold? Because you have not paid attention. You have not paid attention. So that's the component of your scanner must be well understood, at least with the basic background information. Then, before you now applying it, obeying the rules, when you have the basic foundational thing and applying it, obeying the rules will be a lot simple. So it's not be every signal you jump at. Sometimes when we are buying, even a counter trend, when we take it to be like that's the trend. Because when it's a counter trend, what's going to happen? The counter trend is going to be more shorter than the counter trend is going to be shorter than the real trend itself. That is the direction through which the market is going to. Just like now, this will be like a counter trend. This is like the trend because it's longer. So if this market is going to get rejected here, that is going to be shorter. The next I will now say will sell and pierce all of this nonsense and come down to this point. Because if you look at it, the real edge here, look at this a high here. The real edge is down one to this point. That's about $4,498 for the price of gold. Okay. So these are the components of your scanner that you must pay attention to. The time will come, market will be choppy, just like Euro USD. You can see scale to scale. But because you have scanner that say, hey, you know what, the guy is already tired here. Look at it. I told us that market was going to jump, in our market update on Sunday, yesterday, and look at the jump and move back again. It's back to that point. Later, they print another thing and all of that for you. You will be selling, buy, sell. Somebody is waiting for a proper structure to be adjusted. Sorry. But you have a tool that's going to give you, that's going to be giving you, those buy and sell entry. So including the Bitcoin, like I've said earlier, look at it. So you can see now, look at it. Bitcoin got supported here. There will be nothing that will make me not to look for a buy, even when, see now, you can see 1 hour I have not printed a buy here. So in a rare occasions, it's already a support zone, right? In a rare occasion, when you go to 30 minutes, you are going to see a buy. Let's go. Let's wait. Okay. It didn't even give you a buy. So, but it's still giving you much, much more support and all of that. But some of you who are not used to the market understanding so much, once you don't see the signal, leave it. Just joyfully, you will have taken this joyfully. All right. If I go to 15 minutes, so you are going to see that all of this, no signal, no signal. So that means the market is just going to be struggling. But if you look at the level of support you are having so much, that means the strength is still very, very powerful. All right. So now, I've just shown us, and I've told you the most powerful signal is the one that come out in 4 hours, and because it's going to give you a longevity of that trade. All right, longevity of that trade make more sense for you, and then you can trade and trade and trade and trend the market as much as possible. So, but this is going to be explained at the level of what's it called? At the level of scanning process. How to now take trade with your scanner. This is the most important area that most of us have been missing as much as possible. Okay, now at this point, I'm going to pause. Okay, I'm going to pause. Yeah, I'm going to pause and I want you to synthesize because I'm going to ask questions I want you to synthesize about the component of your scanner. So you that have the scanner, open your scanner in the next 5 minutes and examine, please, I want to examine this instrument. So that we're going to be interacting together. Those of you who have the scanner, you already have subscribed for the scanner. Examine with your scanner, examine the following. PS. One, GBP USD. I'm not saying you should trade, just examine, you will tell us what to see in them. All right. GBP JPY. Euro. No, not Euro USD. SND USD. 4. ETH USD and 5 5 uh V75 1S, right? I'm giving this assignment. In the next 5 minutes, I want you to examine what to find out based on the component of your scanner. Don't be afraid if you don't get it right. That's why we're here to learn together. But because we're going to go into application right now, so I want you to examine all of this in the next 5 minutes. As we come together, you give us what to see in the next 5 minutes. Let's say just 6 minutes. That is to say by 12:57. All right, 12:57. So do the assignment now and let us work together. So those of you who have the scanner, open your scanner on your system and then examine what to see based on your scanner and the component of your scanner. Examine what to see on GBP USD, right? Based on your scanner, GBP USD, what do you see? We talk about GBP JPY. What do you see? Okay. We talked about oh, yes. Where was I? Was I in Euro US that time or gold or Bitcoin? Okay, somebody's happy. We're here. We're in Bitcoin. Okay, please check what I've just shown to us now and do the assignment. So examine those five instruments: GBP USD, GBP JPY, SND USD, Ethereum, and then volatility 71 1S. All right. Do that now and we'll resume. Okay, I think I need to pause this so that, okay. All right, so let's have volunteer. Let me see our hands up. Any volunteers? Don't be afraid, don't panic. It's learning, we're learning together. And then what do you examine with your scanner? And of course, we talk about, some of those things. So you may forget trading plans because we have not implemented it just for you to understand what is it. So, but we'll talk about structure and trend on 4 hours, buy and sell Fibonacci, and then institutional footprint. I talked about the two major institutional footprints you should put your mind on is a fair value gap and order block. Forget about any other thing. All right, then premium and discount, so for buy, and then exit point, stop loss, and then the component of it. So we're going to go now. So I'm sure I'm having some volunteers already. So let me check. All right. So thank you very much. Okay. Yes, I've seen one hand. Okay, I'm seeing other one. So let me just check. So I'll call us. So please pay attention for every one of us. Okay. Dean on Forest here. So now we're going to see. I'm praying for grace, right? For we may have to continue this thing over time because so that everybody hand can be on deck and then we can maximize as much as possible. Okay, so everybody pay attention. I'm going to take my screen off. And so Dean, okay, so tell us, sir. Go ahead.
All right, boss. Just a second. I'm trying to. I was on my phone, but I was finding it difficult. I had to come to my laptop.
Laptop. Okay, okay.
So I'm just trying to. I'm just trying to log in now on the laptop. That is log into the
So the
what do you call it? The
training.
Zoom. So that I can share my screen.
Okay, okay.
Yeah, just few seconds, please.
It's all right. It's all right.
Mm.
So, ladies and gentlemen, so let's be attentive because what we're doing here is not okay. It's not just trying to get some things. It's just for us to be on the same page, and then everybody can learn from. Okay, I see another hand. Ella Frame. It's okay. Okay, Ella Frame International. All right. Okay, your hand is up. Okay, can you? Oh yeah, go ahead. Ella Fra International.
That's Madam Ella from Houston.
Oh, yeah,
Mm.
yeah, 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 yeah. Mama di mama. Mama
Yeah,
di mama.
Mama.
Mama di mama. These are the people of gold.
Mm. Mm.
Okay,
How are you?
ma'am, I'm good. I'm good. I'm good. And
Okay,
you?
I'm good too.
Okay, so you want to?
Oh,
Yes, yes.
yeah.
Okay.
For GBP USD, I
Okay.
checked on the 4 hours.
Okay, let me share screen
Now,
with for you because like you're not sharing your screen. Let me share screen for you
okay.
so that all of us can see what you are saying. So let's go. Okay. Yeah. Okay. GBP USD, you say, right? Or which one?
Yeah, go to 4 hours.
All right, Mama. Let me just go to 4 hours GBP. Where are you? Okay, thank you. Yeah, good. We're 4 hours.
Yeah.
Okay.
On 4 hours here,
Yes.
we can see that is at a support
Okay.
and it has been struggling
Okay.
either to break up to the next resistance
Okay.
or to break down to the support below. So
Okay.
until it touches the resistance, moves to the resistance, we
Okay.
cannot take a trade.
Okay.
Until it breaks through and gets to the support below, we cannot buy. So we
Okay.
have to wait.
Okay.
But on the other hand,
Yes.
if we go to a lower time frame, maybe let's go to 3 minutes or 5 minutes.
Okay.
Okay, we can see that at 5 minutes
Yes.
already there is a change of structure. We have a change of structure there.
Okay.
So at that point, we can sell.
Okay.
Or on the other hand, if you don't want to sell, you
Okay.
can wait for it to get to the support
Okay.
and retraces back
Okay.
up
Okay.
before we can, take a trade.
Okay. Okay. Thank you, Ma. Yeah. Any more information for that?
Mm, let me see. Yeah, we can still allow it,
Okay.
for a buy. We
Okay.
have to be patient. Let it get to the support below.
Okay.
Then we move to a lower time frame
Okay.
and now locate, where we can enter a trade. We can check 1 hour. We can check 15 minutes. We
Okay.
can even check 5 minutes, even 30 minutes.
Okay.
Anyone that gives us a trade, we will now enter.
Okay. Wow. Amazing. Thank you very much. I hope we got value, everyone that listened to this
So
conversation.
can I add to this?
Okay. Yeah. Why not? That is a brainstorming that thing. So
Please, on
are you
15 minutes on the same instrument, sir. On
okay? As
15
opposed
minutes.
to 15 minutes. All right.
There's a clean entry on 15 minutes. A very clean entry
Okay.
on 15 minutes.
Okay. Okay. So there was a clean entry on 15 minutes. Okay. All right. Fantastic. So if we have taken this clean entry, please just a moment. If we have taken this clean entry on 15 minutes, where do you advise us? Because you have to give us verdict. Okay. So what should we do if we take this clean entry at 15 minutes? Where's our stop loss? Because that's what overview any instrument will pick for us. First, you have to help us to look at the structure, our buying, our buying point, and then exit, which are the support and resistance. So where should we actually
Yeah,
exit?
my stop loss should be above the resistance.
Okay,
That should be my stop loss.
okay,
Should be
above
above my resistance. Then yes,
this
the
one.
resistance.
Okay,
This yes. Then my take profit should be 1:2.
1:2. Okay,
Yes, sir.
so that means if we had entered here, right? If we had entered here, so our stop loss supposed to be here, right?
Yes, sir.
All
No,
right.
no, no. Yes, a little bit above it, not too long.
Okay, the entire.
No, 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 no. Just come back a little.
Okay,
Yes. No,
here,
just
right?
come back a little. No, no, the buffer is too much. Yeah,
Okay.
something like that. Yes.
Okay, that's about 20 pips, 20 point something pips. So 1:2 risk reward will have been somewhere here. Okay, so 20 pips to this. Okay, so all right. So thank you very much, sir. So now Let me now use what he just gave to us, what these people gave to us. Community work is sweet. Okay. Now, this one they gave to us now 20 pips. Now, this is where talking about position sizing is good. So we're not done. I'm just shooting up to this. So that means ordinarily the question now will now come, how much is my equity? Let's say you are trading with $200. In reality, sir, I must be very frank with us. In reality, yes, fine. One can be meticulous to trade $100, $50 and build it up. But to be very frank with us, when you are trading with small money, you can't afford your full potential of trading. Because at the end of the day, you will be struggling to I beg you. You will see some good trade, but the buffer you have will not be able to cover. So, but thank God that this is currencies. So now let's go. If I'm trading with $200, I'm very conservative in some trade when I'm trading. Okay. So that means I want to risk, let's say, $10 out of my $200. That will be how many percent? So if I want to risk
5%.
so okay, that's 5%. Okay. So 5%, and so how much our stop loss is about 20 pips. So let's make it 23 pips because of spread, give and take. So now if I calculate, so that means I can actually enter this trade with 0.04. Considering the amount I want to risk in the trade, I can enter 0.04 and then take my profit. So when it delivered to this point, I'm going to trade. So I'm not modify anything. I just want to add to it. So we just go now. So let me go back to other persons. Okay. Before Dean will give us. Okay. Yes. So you need seriously. Okay. So I see. Taibat want to say something. Taibat, which one do you pick before Dean will come up to give us his own? Taibat,
Okay.
yes.
Yes, sir. Good afternoon, everyone.
Would you want me to help you to see to the share screen, or you will share your screen?
Yes.
As you help you,
Yes, yes. Yes, help me,
I
sir.
think I will make plenty money today. People that are using
Yes, you.
share screen, they will pay me plenty today. Okay, so I'm sharing screen. So which instrument shall I go to?
Okay, I want to go to GJ.
Okay,
GBP,
JPY.
JPY, yeah.
Okay. Let me go to GJ. Fantastic. What time frame should I go to, man?
4 hours.
I should go to 4 hours. Okay.
Okay. So, from my own angle, if
Okay.
we look at the market, although there's no signal from the PBS scanner,
Okay.
but then from the 4-hour perspective,
Okay.
there's an indecision candle.
Okay.
It's either wait at close to a resistance level. So
Okay.
it's either we wait for that candle to get to the resistance and give us a signal,
Okay.
then we can sell down, or alternatively we wait because there's a big fair value gap
Okay.
between the the last green candle. That's
Okay.
the after this buy signal, the next candle,
Okay.
there's a fair value gap. So at times, the market can just jump across this resistance
Okay.
and go to fill the fair value gap, where you cannot take a sell from that fair value gap to the
Okay.
next. First of all, 1:2,
Okay.
then we can expand after some time.
Okay.
That's what I noticed. Then from a V75,
Okay.
and I don't know if anybody has question from V7 from this one, if I'm right or wrong.
No wrong, no right. We're going to do it together once all of you are done. So comprehensively, we do it. We'll see where we need to adjust, where we don't need to adjust. So it's only maybe anybody that have contribution to what you have said then.
My contributions are
Okay, sir.
on the resistance. But
Okay.
when this come to hit the resistance, it will have a sharp drop before continuing again.
Okay.
It might drop to sweep this liquidity of this long green candle. It might sweep it before going back up, or yes, it might sweep it before going back up. Before it can go and take out the fair value gap. That's my own observation.
Okay. So are we to trade need now, or we are to wait?
No, we are not. We are
Yes,
waiting. We are
wait.
waiting, sir.
We are
We
waiting.
are waiting.
Okay, so
Yes.
this instrument is we have to wait. Okay, all right. Okay, as we go to 75, as we say.
Yes.
Okay, 75 1S. Okay, 75. Where are you? Oh,
A
okay.
4 hours time frame.
Yes, I'm on 4 hours.
Okay. So from the 4 hours time frame,
Yes.
this signal just started printing now,
Okay.
but then from the trend is a downtrend. So it has given a sell signal from
Okay.
this 4 hour.
Okay.
So I can now go to my 15 minutes.
Okay. Should I go? Just instruct me.
Yes.
I will obey.
Yes. Yes, I go to 15 minutes.
Okay, I'm going to.
As long as you pay at the end of the day.
As long.
Mhm.
Uh-huh. So from this 15 minutes
Yes.
now,
Yes.
I cannot enter this market because I feel I'm already late
Okay.
for the 15-minute perspective because you can see the signal, it has dropped. So I'm already late. So I will just wait for this price to pull back towards close to the resistance of that 15 minutes. Then I will take a sell to this first, the nearest support. This support 1:2 first. Then I
Okay.
can expand to this nearest support. Then
Okay.
I can now go to my bigger time frame and see there's a space for me after I've taken my pocket my first 1:2 in my pocket first.
Okay.
Then I
Collect,
can
collect.
go,
This
Mm.
exercise.
I
This
can now go
exercise.
to the bigger
This
time frame
exercise
and
for me.
expand
Money.
my take profit. Then
Okay.
my stop loss will be above this resistance of this 15 minutes. That's where my stop loss will be.
Okay.
So that's my observation with this V75. Although it's not my peer, but then that's what I observe.
Okay. Okay. So what you are saying with your observation is that if we want to take anything into D75 now, we should wait for it, to have
Yes,
a half.
yes,
Okay, on
yes.
this 15 minutes. Okay. Okay. Any other support? Any other support information from anybody on it? Okay.
Yes, sir.
Okay, sir.
She said we should wait. Very correct. In the waiting, we're supposed to have just used our Fibonacci to measure from that top, that's this signal line, to the down part of this green line, in order to see in order to see where the pullback. So it's almost close to the 50. So at this zone now, of 50 to 75, anything that happened there, we should be able to enter the trade.
Okay.
Thank you very much, sir.
Okay, so in a nutshell, we are waiting, but where we are waiting is this place. That's what people are saying, Abby.
Yes, sir.
Yeah.
Okay, all right. Okay. All right. Thank you very much, everyone. So let me remove my screen. We'll go to Dean. He's gonna give us okay. Dean, please wait. Let this people.
Okay. Oh, okay.
Yes.
Okay.
Joseph. Joseph, please unmute yourself. Tell us.
Okay, sir. Let's go to NZUSD, sir.
As we go to where?
You are faint, so can you speak up, please?
You are not speaking up. SN,
Sir.
SNDUSD.
Okay.
Okay.
That's what I looked at.
Fantastic. How many hours will I go, or how many years?
I stay for let's go to daily first, sir. Daily.
Okay, let's go to daily first. Okay, sir.
Yes, sir.
Here I am.
Okay. Currently from the daily, it's reacting from a major point, a major key level, and it has printed out signal for me. So let me go to 4 hours now.
Okay, let's go to 4 hours. Okay.
Yes, sir. Then for my 4 hours, I discovered that it printed signal already on 4 hours, but the move is still on the move because for the first time it went up and now finally it came to close with a red candle below the resistance, which make it strong and it's still valid because currently it is still red. It's not neutral at all. So we are anticipating a sell trade from there. So let's go to 15 minutes, sir.
Okay, sir.
All right. I think from this 15 minute point of view, I will love to just can we draw a Fibonacci, sir, from the high, from that very gap to this current place where it is, from that high?
From this place to where? From
From
here?
this other one, where the gap happened. No, where the gap happened, sir.
Okay. Okay, this here. Okay.
Yes, sir.
As we go to this place?
Yes, sir.
Okay, sir. That is this one or this one up here?
Yes, that very one there.
Where I am. Okay, sir.
Yes, sir.
As we go to here,
Okay.
as we go to this.
Exactly, sir. It's okay.
Okay, sir.
No, we are bringing it to this very down where the gap stopped.
Okay. This one, sir.
Exactly.
Okay.
So currently, the market is reacting from a premium price already. Got there for the first time, came back to retest it. So this is telling us that, okay, this market will likely still push down. So what we are waiting already, the move has started. That's the move to the downside has started already. So
Okay.
I think for this guy, maybe we missed entry. Will I say we missed the entry or so?
Okay.
So we missed entry for this guy already.
Okay.
Yes,
Okay.
sir.
All right, sir. So okay, so I think at this point now I have to go away from this and then Dean, over to you.
All right, sir. Okay, I hope I'm sharing entire screen. You can see my screen, right?
Yes, it's up.
Okay, okay. All right, so let me leave daily. Let me just go to 4 hours as an intraday trader.
Yes.
Okay, so first we want to check the structure. We are uptrend. Okay. We've been printing higher highs and higher lows, higher highs, higher lows. Okay, so right now we met a resistance and kind of break above it, came back into it. And for this, we are bullish, and I believe we should be looking for buys, except otherwise the discount level is broken below the previous low. Now, this is the current low that we have, and there is a high here, irrespective of the fact that this canal is covering it. So this is the low, and this is the high. Okay, so now what we are looking at here is a pullback. What we are looking at here is a pullback. Now, for me, I will wait and see what happened on the golden ratio. Now, if I go to lower time frame, when we get to this golden ratio, I go to lower time frame and I see entry from this level, I should be entering. So take for instance now, yes, for those persons who said we are selling now, yes, we are selling, but we are just taking advantage of the pullback, okay? But ultimately, I believe that we should be looking for buyers, but because we have a tool that is helping us to buy and sell, what we should be doing now is to buy. To sell. And while selling, you should bear in mind that your sell is just a short term. You want to just take advantage of the pullback. And for me, if I'm selling this trade, I will put apart from the fact that we're looking at the discount. Now, this is 1 hour. I'll look at, this is external liquidity. And I will believe that, okay, the market definitely is going to come to this 61 level. So if the market comes to this 61 level, I want to see what is happening on a lower time frame, like say 5 minutes. By that time, because this is the 61 level, once the market come here, I want to wait for, apart from the scanner, yes, A plus, I want to wait for the scanner giving me an A plus signal where we have the 3 candle pattern. My boss will call it, boss, what do you call it again?
Swing point.
No, 3 candles, the 3 candles.
Okay, power of 3.
Power of 3, yes,
Yeah.
power of 3. Where we have a power of 3 from that place, and I will take a buy. But right now, this market is actually selling, but the sell is a pullback. So that's for that. And basically, when you come to look at the trend, all right, look at the trend. We've been trending up from this level. And so let's go to daily. Let's go to daily. So this is daily. Daily gave us a swing point from here down here. And if we run Fibonacci, you can see that on the daily, we're actually on the discount level right now. Let me take this out. So let me run. So I'm just looking at the fact that I'm intraday trader, right? So that's why I worked basically on the 4 hours. But with this now, you can see that on the daily, we've even on a very serious, this is premium, right? Not even discount. And we got the sell from here. So we will sell. But what I'm trying to say on the 4 hours is that I want to take a trade that I should be able to get out of the trade in the next 12 to 24 hours. So that's my take. Then, okay, let's go. Okay, just because it's far, I'm not concentrating on this right now. So I won't be talking of my entry and my exit. If not, ordinarily, should be talking of my entry and my exits on that when we get to that level. But with this, strongly, with what you have seen here on the daily, selling at a premium. No, now this is superb. But I'm not sure that we'll break below this level before the journey will go up when we come down to the 4 hours, as the case may be. So that's just my own point on NZD USD, sir.
Okay, thank you very much. This is wonderful. All right, this is wonderful, and I'm sure many of us are learning. And then definitely the need for learning is important so that you can just be in charge and not be under pressure when you are taking trade, and then you just do what you want to do. Okay, so now we're going to go to next phase. While we do is in the next phase, we're going to do adjustment, addition, removal, and all of that from all we have just listened to and all we have just done and all of that. So I'm going to share my screen quickly, and then so pay up attention on the market as it were. Okay. So, all right. So for instance, there are very, very wonderful things that you must look out for in the market. Yes. So go to first, let's take GBP USD that she analyzed. Okay. Now, sorry, go to this place. Go over here. I was telling somebody about this. I'm going to get about here. Okay, now, so let's go to where we'll take the routine of taking this, of using your scanner to trade. So we're going to do in two fashion. First fashion is for people who are not keen to looking at the market holistically, but they just follow the straitjacket routine. No adjustment, no addition, no subtraction, and all of that. Now, to take this scanner and trade with it, either the trend or whatever. So you want to plot, first of all, look at the daily. So the daily, your job on daily is simple, straightforward. Your job on daily, actually, you're a day trader, you are intraday, you want to make some money and all of that. Your job on daily is just the candlestick. And one of the first thing you want to find out on the candlestick for the daily is the momentum. Is the momentum. So the momentum is very important on daily. Even in a bearish structure market, bearish structure market, your daily candle is a very, very serious point, especially when you're trading gold, Bitcoin, GBP, USD, GBP, JPY, and all of those things. Your daily candle is very significant. So let's look at it. When you come for the day, this was the previous day candle, this one. Now, this candle was bullish, it closed bullish, not just because, so it's a momentum candle. So let's call it a momentum candle. Now, if it's a momentum candle, did it finish a job? Let's look at it. Did it finish a job? Let's see job. The job is that, look at the high of the previous day. So I think with a little or tiny body across it, I can't really say because very tiny body against it or a sweep of liquidity. But this is a momentum candle. So when I come, exactly Bitcoin, gold, I want to see a momentum candle. Any day you come and you do not have a momentum candle, be careful because the market may be choppy for the following day. The following day is going to be choppy because you have a non-momentum candle, not even an indecision candle, but non-momentum candle. Especially, it couldn't form maybe inside bar. I don't want to go to this complex thing. So first, I want to look at the daily. The previous day was a momentum and it's a bullish candle. So my bias for today would be market should be bullish. So if the market is going to be bullish, so by my structure, I go to 4 hours. Now, if I go to 4 hours by my structure, what you want to find is to find your signal. Now, most time when you have 2, 3, 4 instruments you are checking, I want things to be very confusing, then you just abandon it and go to the next one that's going to be more clearer. So coming to the 4 hours, we couldn't find signal though, right? We couldn't find signal though, but we have the market just ranging in a place, and that can be confusing, either down nor up. So when I say if you cannot find signal, so because if you look at by structure, we had a low here, a high here, and a low here, and a high here. So this is the highest. And then we have a low here. This is a failed rally, a kind of rejection to an extent, right? So if that is the case, the market return back here, but we need to take out this to really decide that the market is going down. We need to take out this low. Now, if this is a failed rally, all of these things shouldn't come and form any aggrandizement here, should go and then take out this. If you take out this before you start this rally, you are going to have an enjoyable sell. But this very confusing. Now, sometime if I must take a trade there, that's when you go to the 1 hour time frame. And please take note, when you get a signal on 4 hours, it travels better and well. I would say internal time frame, that is internal structure of 4 hours is 15 minutes. And the internal structure of 1 hour is 5 minutes. Nevertheless, if it's like gold, Bitcoin, or heavy PS like GBP, JPY, and some other big, strong instrument, you can scale down to 5 minutes, 3 minutes, 1 minute, so that you can have a sniper entry that will reduce your stop loss, and then you make more money. So because if you look at it now, so this was the previous day. Upon all this was the previous day. So I'm not going to use this because I wasn't there. It's already over. That was Friday. I'm not going to work on this. Though I know that this resistance is strong for it, but I'm not going to work on this. And it didn't give me a buy signal either when it dropped here. Right, that should be yesterday, where I think when the market opened, it dropped massively and all of that. It didn't give me a signal. So probably if I'm the type that I'm looking for entry at all cost, if I'm looking for entry at all costs, that means this was, right, a buy, and I'm late to this. Now listen, most times this is where we have issues. When a buy has happened on 30 minutes, and ordinarily you are going to take the trade in 5 minutes or 3 minutes or 1 minute, the challenge is this. When the market are move away from that point, the internal structure of that time frame, probably so on 30 minutes, internal structures will be 5 minutes and 3 minutes. So I'm going to mark this, for instance, and I was not there. So how do I still catch this move? Then that means you're going to go to, first of all, look at 5 minutes that form the internal structure. Remember, your direction you are looking at the market is buy. So I'm going to go to 5 minutes, having known that I missed out of the first place that will be an entry for me. It's only somebody who was here that will have been able to take this trade. So if I have missed that, I go to the internal structure of that particular time frame. So 30 minutes, 1 hour, they are almost dragging the same time internal structure, 5 minutes, 3 minutes, and all of that. So if you go to 5 minutes, you miss this, wait patiently. Another trade is here, beautiful one on 5 minutes. Because you're biased on that 30 minutes, the market have given you a buy on 30 minutes. So you just want to find a trade, especially those are people who are finding a short entry like scalping, 1:2 risk reward and take your profit and all of that. You'll have find a trade here. Now, don't ever you sit down on 5 minutes, on 1 minute, on 3 minutes, and say, okay, I'm looking for trade. You have to come from top scanning. So 30 minutes was where we find the signal. Then I come to 5 minutes. So you were not here. This sell that was happening, I will not sell it because in 30 minutes, I want to see the exhaustion. And then that means I was to be taking this trade. That would be very fine. And I will take a buy. You will have find 1:2 risk reward. However, even with the 1:2 risk reward, you want to scale other ones, which we normally do. Now, if I go to 3 minutes, now, for the fact that I go to a very lower time frame, but in most of the currencies, too many lower time frame is not suitable for you. So 5 minutes, 3 minutes should be okay. 1 minute may not make too much sense because it's going to confuse because it's a currency instrument. But you can see the 3 minutes still almost repeating the same thing, totally testing back to the support. That's when you can always find a new trade in that particular market direction. And then that's going to give you a very fantastic warning. Now, so for me to have gone to 30 minutes to find a trade is more reason why that this type of trade, I will not even stay with it. I will avoid it to an extent so that I will not be caught unaware. Because you can see that within that 30 minutes, when you got the trade on 30 minutes, the stretch of that 30 minutes after crossing here is here. So that means if I'm holding any position that I'm still scaling, I'm going to go back to 30 minutes and scale back to this resistance, except and otherwise you break it. If not, that's the place I'm going to scale to. So, but best trade for me is to get a trade at 1 hour, at 4 hours, and at 4 hours, and at what's it called? At 1 hour. And that's like what Mama was trying to say about GBP USD that time. He said, this place is still struggling, and he wanted to let you know that you need to retest back to this point, and we couldn't find a trade. Because the architecture of this trade was from here. So this place now is delicate, except when you scale down to lower time frame. And when you scale down to lower time frame, without a signal from higher time frame, and you get a trade, 30 minutes, 15 minutes, don't stay too long. As it give you, collect it. And this is the mistake most time we make. We want to trail a trade that does not have expansion bay. Because when the signal print to you on 30 minutes, it's not an expansion. It doesn't have an expansion bay because it's just within a choppy environment. And that's it for this. So I'm going to go to the second one, this GBP quickly, and then if we can find a trade. Now, this GBP the same thing is printing, like she said, right? Very good. I need to actually wait for this point. But go and take. When I come in for the day, look at it. Okay? This is already very dicey market. Now, I want to tell you something. Every time you are doing your trade and the market is offshoot from a particular region without having a proper structure, like this, your key levels on that 4 hours and all of that, know that that market have offshoot from a good structure, probably a different environment entirely. So now on daily time frame, I have this. It was a jump that make this happen. If I take another one, let me take it in GBP, different GBP, JPY. Yeah, different brokers will give it a different outlook. Let's see, GBP, JPY, GBP, JPY. Wonder. Okay, I think they just give it the same thing. So now this is the issue. If you look at it, this market was supposed to be bullish. How? This is the previous candle. This is the previous one. This is bullish. It's supposed to be, that's what we call candle condition theory. So this market is supposed to be bullish for the day because this previous candle is a momentum candle. All right. And so to be bullish and at least close above this one. So that if that case, in my mind, I'm bullish for the day. Right? In my mind, I'm bullish for the day. So I go to 4 hours. In 4 hours, we're having a resistance here, but as at the time you actually came, maybe in the morning, depending. So if it's this time you're coming, no signal for buy, whatever, and we're close to a resistance, just like what the structure the person was talking about. Here we have this a high, and then this is an internal structure low, and then we have this total break of structure, this is a break of structure, and then we have a massive drop. So if we have a massive drop, like taking a Fibonacci, that means our trading zone or daily range should be this high to this low. So if it's this high to this low, you can see all of this thing that is doing here is an internal structure, as it were. So if it's this, because this has been broken, and then if I take it from here to this point, so we can now see, so actually at the premium to sell. But like he was mentioning about the fair value gap, I'm sure this should be like news that push the market down, and then we have this drastic one. So filling all this point now will be very difficult because it was not a normal structure. So I ought to go to one if I must get a trade. So you can see that because it was not a normal structure, it was just continue to fill up in different things altogether. So having this was the market opening. Now, so let's see. Now, as we come, we have this. Now, validating this 1 hour, always, when I pick it, I'm going to go to 5 minutes. Validating it, I must have a repeated signal, all right, of the same pattern of that 1 hour I got. Now, getting this, when I have too many support below and no resistance above, then I'm careful. Such trade is bullish. You see the effect of that daily time frame candle that was bullish, even though the market is confusing now, today being Monday, now it's still printing a buy. So that means this type of trade is going to give you a lot of stress because this is a sell here, but you will now see that that sell was actually good, was a good sell, and then actually give a resistance. But what is controlling the market now? The buyers, the daily buyers, the market was bullish after all. And then this will have been a very fantastic sell. I won't sell, chances are there you're going to lose this trade because look at it, you have a lot of support down. Coming to this up is a free zone. Come on. So that market is going to do you abracadabra because the daily bias is bullish. And so that's one of the things. That's why the only thing you got to do in daily, you don't need to start learning too much structure on daily sometime. But if you want to learn, it's good. But just to get, or the daily candle giving you the bias of it. So that means this type of market to sell, no. It's going to be a problem because the market was bullish on the previous day. And it's just that you didn't have a very nice structure to take. Okay, so let me quickly go to SND USD. So we're going to do SND USD right now. So this is SND USD. So let me go to daily time frame. All right, so look at daily time frame on SND USD. SND USD on daily. So there are too many complicated issues on SND USD. You have very much support and have heavy resistance, rejection from here. All right. So, but working on the candle is a momentum candle. Now, at the momentum candle, one of the things that happened is that it couldn't close above this anyway, but it has swept the low of this one. So this is a momentum candle. So, but if you look at it now, SND can be very volatile most time. Now, so that means this market is just doing what it likes to say, okay, today I want to be bullish. Yesterday was bullish, but I'm a momentum candle, but not a clearer direction. But what happened is that it lost strength eventually because the low of the previous day was taken. That means if the low of the previous day was taken, it should be delivering to the high of that previous day. But it couldn't, but close bullish. That means today too supposed to be bullish. So it actually opened and then didn't go below here. So if I go to 4 hours for structure, now going to 4 hours for structure, this is very powerful. So that means you can see on the 4 hours is a bullish market. Remember, the previous candle has a momentum and was bullish. And so you envisage for today to actually be bullish. Okay? So if that's the case, so on 4 hours, I'm going to look at, you see external structure. So you come in from there, you have a breakout structure, a low here, and then this is a breakout structure, this is a high, and a push down to a low. Now, so we have a push up to this point as a high. We have another low here because this is lower. All of these are internal structure. Then we have a breakout structure above all of this region. And then that means this is the established low. So if this one is established as a high all of this could be inducement and have some level of, what do we call it here? Fair value gap. So if it's an inducement, so let me take the fib from here, from this swing low to this swing high. So if I take that, so that means this market, confusingly, right, is struggling, but the best bet is for this market to actually come down, and then you will still find a buy. That means, so if you're going to find a buy, there are things that now happen here. We call it area of focus. In this area of focus, that what is powerful in this area of focus is simple, is that we have opposing candles, so which is going to form like a demand zone or other block as it were. So that means this market needs to come down to this point. But what if you refuse? Well, very possible. So if you are very organic, if you're an organic trading, you're going to miss this because you will not enter it. And you can do this and go to sweep the liquidity here, this one. So then that means you have no trade. No problem. It's not a problem because you're waiting for this market to actually hover here. But why? It has some what we call support level here. Not as powerful as that, but this is support, this is support, this is support. That was a rejection over and over again before. And then the market will come down. So you can see that sometimes you avoid some trade when they are too complex in order not to give yourself issues. So, but sometimes when I now plug it this way, eventually when the market travel down, this is a fair value gap, massive, this is another block, massive, and then that form a proper entry eventually. So for now, the daily was having a nice momentum, and then that means SND USD is actually bullish. Okay, so it is when it come down, so probably want to go to like if I go to 1 hour quickly, so you find a buy here. Was it today? That was last week. All right, so you can see just within a range and all of that. So I probably want to say, okay, let me not give myself unnecessary stress, right? So this type of a trade, except it come down, I'm not going to take any buy. I'll have to come down to that point. All right. So let's quickly go for final one before if I can find any trade on the sequence of your trade. This one, which was that? Give me. Let's go. Okay, volatility was that? Volatility 75 1S. Okay. Now volatility 75 1S. So if you go to daily time frame, so daily time frame is bullish. Okay. All right. So this is it. So all you are looking for on daily is the candle continuity theory or the momentum of the candle. So not necessarily walking toward the structure, because if you want to walk toward the structure, that means you are a swing and position trader, because you'll now be walking like this and be calculating a long structure. No. So if the market that actually keep some record of some time, yeah, you can market, but I think there's no need. I always people say, hey, I go to the weekly, monthly. Say, okay. Okay, before you do all of those things, they don't break. So if you look at it, we entered this market yesterday, though, when we were doing market analysis. See what happened. Here we have, this was not a nice one. That's why it's slow. This was not a nice swing point. That's why it's slow. If it was a nice swing point, this is supposed to be maybe close above this. The journey will have been smoother. So, but you can see on daily time frame, this is what we call CCT. That's candle continuity theory. So when the previous day candle closes and the new day candle closes above it, it's said to be the next candle day should be bullish. And so if you look at it, because every single candle is a structure. Every single candle is a structure. And that's what happened here. I bought this market since last week. All right. Because look at it, come to the support, a very nice rejection up and all of that. This one just starts, but no momentum at all, and then got rejected here. Now this one come back here, and then we'll have this. This one closes. Now all you need, if this market is going to continue tomorrow being bullish, or probably, if you look at it now, two things now align here. You're going to see a very broad fair value gap. You're going to see a very broad fair value gap here on daily time frame. So, but when you come and there's a momentum, yes, there's a momentum, just that there are so many selling pressure over it because you're having a long week at top. Now, but today, if I come in today, I'm going to be buying. And how do I go about that? I've seen that the previous day was bullish, and then today should be bullish. So let's go. So let me just even mark today. This is today. And then go to 4 hours. Remember your structure, your 4 hours. Now, so if you look at it, the market is struggling, right? Now, so struggling. On your 1 hour, it's still working on your mandate. It's still working on this. So if it's still working on this, very simple thing that most time you want to do, since it's still working on this, these are, synthetic instrument, especially when it comes to this, some structure you look for, you won't get it, so, but you work with the candle. So what will happen? I'm going to go to 15 minutes. Not necessarily, because I don't see any signal, this old signal that's still holding on. So I'm going to, if you go to, okay, let's look at 4 hours. Because remember, we say if you cannot find a signal of 4 hours, we should find a signal on 1 hour. Now, on 1 hour, we didn't find a buy. Remember those of us who followed yesterday, we took a buy yesterday, and I said the signal was already on here, but we came late. And then it did well. It did well to an extent, depending on how many people bought into it. Now, this is the point. Now, you can see on 1 hour, that's a very nice structure. Now, I typically just want to show you, there was a very nice structure this way. Here, 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 here. Now, this is this. Yes. So are we breaking this? Yes, we have. So that means let's look at something. So if we take from here to here, that means this market has actually taught into this 50%, right, entry level. And probably you can still say, okay, this is a Fibonacci, sorry, you can still say this is a fair value gap into that region and all of that. Then you have the support here. Worst case scenario can return back to the support. But finding this was a very good one, right? So that means when I took into this point, probably if you go to 30 minutes, you will see probably a buy, not a buy, but there's a swing point of the structure. Now, when you go to 15 minutes, remember, please take note. The signal, the origin of this signal was 4 hours. So the internal structure of 4 hours, is 30 minutes. That was the signal that produced this. The internal structure of 4 hours is 15 minutes. That produced this. But this signal was not too powerful, but there's something that happened, a confluence on support level. Apart from the confluence on the support level on this 15 minutes, there is a strong level of this here. Okay, this is a fair value gap. So the market touched into it. Now the body did not close. If the body closed below the gap, it's not making any sense. Okay, and if you look at it, it's like a double fair value gap from this other block here. I'm not trying to let you know this other block so much so that you don't get yourself confused. But the important is that you're able to see that this trade, you were expecting it. It came down here because the original trigger was the Mr. 4 hours. Mr. 4 hours was the original trigger, and I have laid the internal structure. So when you miss the entry, go back to the internal structure. So the pullback now created internal low, high, and eventually come back here, and your signal, pick it. That was not too powerful, but we took the trade anyway, and then that trade was running. So here we have at another strong resistance. But what has happened? It's another point that the market is pulling back into a new region. So once you miss a trade on 4 hours, that signal was given, you go to 15 minutes, you miss the first entry, then the pullback on that same 15 minutes is going to form your entry. And that's exactly what happened here. And so you will have found this entry. Now, if the entry is not too superb for you, that's when you step down to like 5 minutes to see a very nice one. This is change in state of delivery. This is change in state of delivery. How? This one, engulf, and all of that with your signal. So your entry is here. Your stop loss should be below here. Now, there's something very important when we're trading. Most time, the power of 3 can form 2 candle. I've told us before that the big candle that engulf form 2 candle in one. So that means your buffer should be below here. And we have said that anytime you are taking any signal and you get your sniper core and it's aligned with a support, don't just put the signal just below your entry, but below the support or the resistance. So before getting here, say if you already done 2 ratio, 2.5 risk reward. So that means your first target ordinarily will be done here. And then if you just say hook up to this point, then when it breaks it, which is going to break, if it break this above, then your trade continue. This is very, very important. Repeated pattern over, and again. It's going to keep you, sustain you continually to be getting the profit that you're supposed to get. Remember, today is an intro to give you clarity on the basic fundamental of this scanner. It's a very powerful scanner, but if it's been abused, of course, you know what to do. We have said if a rifle is given to a man who is not ready to learn, then expect a man who's going to kill himself. I think Aliyu can testify. I think Aliyu can testify when he was shooting.
Yes, sir.
He was shooting the gun anyhow. Right? He was shooting
Yes,
the
sir.
gun. He was shooting the gun anyhow, and the gun was answering anyhow. Pa 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 pa. Sir, what's going on? And all of that. And that's exactly what happened. So, ladies and gentlemen, I'm sure we have done Noble today. And so, because what we won't cover today, I never expected we're going to cover it, but it's cool. So that we're able to do that. On Wednesday, we are coming to pick trade anyhow. So it's just for us to, you have gotten the foundation. I'm going to upload the recording so that you can listen to it and learn more. And then when we come on Wednesday, is to be taking trade and you'll be seeing some things. Now, there's something very important. When you are trading, sometime when the market, especially gold, please, gold will change some narrative. I showed us some trade I took in the morning in one of my prop firm, right? I was on $250. Purposely, I did the recording and I don't want to take the profit. And that's what we do most time. And you need to correct it. Most time you enter trade, you thought all trade is trailable. Not all trade are trailable, especially when it has to do with gold. Not all trade are trailable. You see this market now, the way it's doing, everybody is happy. If you enter a trade, you will be going. But you have not looked at the structure to say, look at it on 1 hour. High, a low, a high. This is a break. That is market structure shift. So pulling back to probably, I've told you, institutional footprint, this order block, or the entire order flow. This is another flow. Entire order flow. Okay, so this candle have tapped into this order flow. So if you go so much up and all of that, so you probably can look at it and say, okay, this order block, so maybe you can come to this order block. Then you begin to look at other things within this order block to say, okay, we have a fair value gap into this. And this same candle have tapped into it. Since that tap into it, what do you think this one is going to form? This guy here is going to form what we call liquidity. That is an engineered liquidity. So if you form an engineered liquidity, so look at it here. So that means what you are looking for is for the market. Watch and see what's going to happen. By the time the market crosses this liquidity, before getting here, your scanner will print a sell. Oh yes, your scanner will print a sell because there's a sweep of liquidity here. So, but imagine for somebody who sold, I sold, I say it was on $250. But people don't pay attention to this because we sold from here. It was selling massively yesterday, and then today on, when the market opened, we sold here. I said $250. The second one is $135. If I check that trade now, I don't think I've closed it. Have I? I don't think so. Well, maybe I don't know. Okay, the loss of that one is that the one that's on $250. The loss of that one now is $125. That's on a drawdown. That was money that was $250. That's some of the mistake we make. We open a trade, say, I'm trailing it. Not all trade are trailable. If you see that, if you look at that, volatility 75 1S is trailable. If you start with me since last week, it's trailable because it has a long journey to go. According to Dean will say, no, this one will go far. Why? Because if you look at where the market picked from, yeah? If you look at where the market picked from, where is it? Somewhere, where's this? Can you see now? If you look at where the market picked from, if you go to the boss, because the boss is the one that tells where the market, if you look at where the market, except this mountain, outside this mountain, one is able to pierce that mountain, just expect continue buy. Can you see that? Continue buying. That's what you're going to be having. Except this cloud, resist it. Right? Except this cloud. Because look at it on daily time frame. Can you see that? Except this cloud. Outside that, out of this cloud. So for any trade you took since that last week, there's no need. I don't even need to look at it. So that's where you can trail. When you have a neat reversal on 4 hours on daily and all of that, then you can trail and trail. But market that's just for an interval to pick some money and all of that. No, yesterday, I don't know how many took that trade with me. I've not closed it. It's just there. It's just running its own journey and all of that. So that's how you enjoy this scanner and build up your momentum. So you can see gold. Look at it, massive, massive. I'm sure if I was not busy and I've entered a buy, because when he sent the signal, the 4 hours didn't give us the signal, right? The 4 hours didn't give us the signal. But I was telling somebody in the morning, I said, this guy is inside a very strong support. If not, we have a lot of, fair value gap down here. Or he has gotten enough liquidity he wants to get, right? And then pushing up. 45 push up does not say it shouldn't be rejected. I haven't taken out this liquidity and then get rejected here. And boom, then continue to do the abracadabra again. And that's what, gold can do. So, but when we went to 1 hour, and there was a beautiful buy here. So if you see on 1 hour, look at it, very simple. 1 hour have said buy. Look at it in a demand zone. Okay, and that means I'm going to go to my, just use my candle to just delineate it. And then I go back straight down to 5 minutes first. First, 5 minutes. Beautiful trade were coming up. Beautiful trade. He got here, he was struggling. He returned back and retested the demand zone. 1:2 this what you have done fantastic. Gold on that, it gives the very beautiful signal, returned back to 3 minutes. And I can tell you it's going to, so 3 minutes, bad signal. I want to have confirmation of my entry. Bad signal. Why is it a bad signal? The candle that carried the signal, no candle closes above it as bullish. That's it. Now, so good signal. So imagine the market you want to buy, right? No good buy. Look at it. This is not a good buy. No. He said you should buy. Why is it not a good buy? Because it's a 3-candle close. What you want is the first candle, then the second candle, irrespective of how the second candle looks like. But what you want in the second candle is that it has to sweep below the first and the third. Right? Then the third candle, now this is the challenge most of us have in understanding this scanner very well. You have to understand it. Now, this signal, right? So let's look at this now. Go this way. This is a buy signal. And just like this one, bad. This one sell, good. If you're a scalper, you will scalp it. You make money. What is the rule? The rule is 1:2 risk reward. But what you are looking for is actually buy. Why? Because I got the signal on 1 hour that say buy. But in that 1 hour, this is the 1 hour we mark. It's still daily dial. Look at it, man. This is, what time frame is this? That's around 6 a.m. And I've told many of us about the time of trading gold. 1 a.m. to 3 a.m., powerful. 5:30 or 6 a.m. to 7:30, that Frankfurt, powerful. Then after, London section, not even those sessions. Most time, say trade session, it's not necessary. But if trade session volume is available, that's good. So I think 10:30 and all of that. Then next around 3 p.m. Then next is around 5 p.m. Crazy time frames, timing. Now, so look at it as you wake up. Now, if you want to sell this one, you can sell down because this is a very powerful signal. But you can have a powerful signal in the wrong place. It's not good. Then A plus would be powerful signal in the right direction. Makes sense. But people who are already used to their scanner will sell this. But this is the problem. Look at the problem. Because you didn't work with 1 hour as the boss, this is like 105 pips. So 1:2 risk reward. Look at it. This is not the type of trade you want to trade. You're on 1 minute and you say, people, I say the thing won't sell up. No, it's not. Remember, you are waiting for a buy, but this is a very powerful buy, a sell signal. So you have done 220 pips here. Fine. Your signal you are waiting for is now this man here. Why? One, 2, 3. Now take note, please. If it's a buy, this candle, the accumulation candle, which is contraction, the expansion candle, which is manipulation, it can be any color. It doesn't matter. So it can be red, no problem. But you see, the distribution candle must be bullish and must close above this center candle. If you don't understand this, whatever thing you will do in your trade, you will mess it up. Anything you will do on your trade, if you don't understand that there are 3 candle formation, and in this 3 candle formation or closing candle, this one, expansion or manipulation 2, the 3rd candle should bring the message that this one say. Hello, he said we are going to clear road. That's the meaning. And that's what happened here. Accumulation, manipulation, it should be lower. It doesn't necessarily mean that, okay, let him close inside. But the better I close inside, the more powerful. But no problem. It doesn't close inside, no issue. Okay? It doesn't close inside, no issue. But if you close inside, it makes more sense. And then that means your entry of this trade is here. Your entry of this trade is here. Simple. Then your stop loss below here. Then you now, since it's your direction, it's 1 hour. Yes, 1 hour is not as powerful as 4 hours, but it's good. So first target, 1:2 risk reward. So your 1:2 risk reward is already done here. Can you see? Very powerful. Now you have other position you opened, and then you return back to a higher time frame. You came from where? You came from 1 hour. Return back to where you come from. Okay? So that you'll not be scared when the market is pushing back to retest that zone. So we go back to 1 hour. Now, in going back to 1 hour, you can see now we have taken the liquidity. All right? So when you go back to 1 hour, so look at it. I think I even sent this as an example in the training I was doing. And I say, okay, so let's take this one off. This is another block, ladies and gentlemen. This is another block. Here, one. And another massive one here. Back to this. So this was tested, all right? So this will be the major one. So now here, since you have this, you are now extending this way. Or targeting here or here. Now, you know why you don't need to entertain any fear? When you push it up here, at this point, you're already adjusting your stop loss above your entry. So even if you push it here, it's not a problem. So, but if you put it here, that would be like 610 pips. If you put it above this liquidity, okay, so about 620 pips, thereabout. So, but imagine for the man who was selling, he didn't take profit. The market got to support level and give a buy signal. Come on now. And you do nothing, then it is when it's now moving up. Say, oh, if I know I will have. No. You have to make your decision as prompt as possible. So these are the things we must understand. So when we come in on Wednesday, we're going to be looking for, so this basic explanation are not going to be there. We're only taking trade and be talking to say, okay, let's look, okay, this signal give us this. Okay, let's check. Let's go down to 15 minutes. So somebody who did not understand the basic foundation will be asking, why do you go to 5 minutes? Why do you go to 15 minutes? Why do you go to this as much as possible? All right. So this is the basic thing you must know and practice again and again. Trust me, you wouldn't want to start practicing anything. I don't know. Because what is the essence of practicing so many things? Is it not money you are looking for? So why do I need to start going up and down, all of that? All right. So any questions so that we can wrap up? Okay. So this question. Okay. So it's what is fair value gap? How do I recognize it? Then I need a video on how to draw Fibonacci for buy and sell. Okay. If you are now listen, if you are on PBX Club, now like those questions you're asking on how to draw Fibonacci, if you're on PBX Club, there's a need for you to go to your 3 months your 3 month stuff. What's it called? Aliu, what's that? So your 3 month challenge, right?
90 days
90
challenge.
days
Yeah.
challenge. Okay. So 90 days challenge, we clarify you so many things. You will not tell yourself, you beg yourself, say, oh, why am Mumu like this? You all just tell yourself, what did I do myself? I just do myself batting. Why? Because the market, the thing you have been struggling with has already taken care of. Now, but to answer that your question, it's not a big thing. But not all fair value gap are valid. And there are two major problems people do not understand. So there is fair value gap. So I will explain that one and we'll close. FVG slash GAP. Okay. Okay, BAG. BAG. They look alike. FVG is fair value gap. What's the fair value gap? A place left uncovered where the market didn't balance a book. Every trading candle balances each other. When you open, close, the next one open, rebalance it. So it's an institutional manipulation in the market. Fair value gap that appears after another block is said to be valid, but not all the time, not as prompt. People think that fair value gap must be feel immediately that it happens. No, it doesn't work that way. So people now say, this fair value gap, I'm waiting for it there. Then this, you see here, you see this market that moved, that was last week, massive move. So that's to tell you that gold actually need to come here because this has not been filled. Let me show you. And you can see that your other block is there. So we're now 1 hour. So this is, so here, this candle here, this opposing candle, this red opposing candle is another block. So let's take it off. So this small candle is a demand zone. Now, it aligned this key level of demand zone to other support and resistance. That's why you see this was coming from history and aligned with other. These are history. These are history. So it came and still aligned with this is an immediate demand zone. Now, people misunderstood demand and other block to be the same. They are not the same. The last opposing candle before the market aggressively move away is another block. So that means since market is going up, market pull back here. This red candle is another block. The whole candle there is another block. Okay? So now, so that means the small candle, any not productive movement before a massive move is a demand zone. If it's a buy, then any unproductive movement, squeeze, and all of that before massive away is a supply zone. So since this here, all of this point now, they are key levels. Now, the other problem again is that inside this demand zone or supply zone or whatever, we now have what we call order flow. The whole region here, this whole region you are seeing here is another flow. Because when you have a swing point and all of that, break away, the market move up, this is another flow. It has not been mitigated. So there's danger in gold. Okay? So that means this place cannot be left unfilled. But will it be filled immediately? May not necessarily be immediately. So that means I have an intention. So when the market is going to be crashing down here, some people will be shouting, oh, it be like say market won't class finally. It will get here, probably still even come and induce to this point, and then now buy again, say, I don't even understand what this gold is doing. It's a bad thing. It's not a bad deal because there are things you do not understand. Now, so going by fair value gap is formed by 3 candles. Fair value gap is formed by 3 candles when market is moving. A point at which there's a hurriedly move away. Now, this has been defined in your 90 days challenge. So go and learn it there anyway. So understanding is there. So a place where market hurriedly move away. So 3 candles are candles that form fair value gap. So we have this market, then we have the first candle, we have the center candle, and we have the third candle. Okay? So inability for the third candle to fill this movement. So this gap left is called fair value gap. So it's an institutional, and what do we call it? Imbalance. It's an imbalance, right? Because the institutional trader want to do something. So markets come back to fill such place and continue to go towards the direction it's going. So that's one type of fair value gap, basic fair value gap, and fair basic imbalance, as it were. Now, B, breakaway gap. Breakaway gap are not filled. Sometimes you'll be waiting. Mostly, fair value gap are filled immediately, most time, but breakaway gap are not filled. Breakaway gap is a sign of strong momentum towards that direction. While you are waiting, you say, now, wow, the market refused to come to my place. Come, now, come. It no go come because it's a breakaway gap. Breakaway gap means sometime this market that move here, when it come, instead to, so you can have this gap now, you can have this week now. Let's look at this week. So this week can be here. So if this candle, when it closes above this week, anybody close, the third candle body close above the wick of the center candle, it's no longer fair value, guys, a breakaway gap. So the market may not come back to mitigate that. It will continue to print papa. The same way for sell, it's going to create that. Then another fashion of fair value gap is called liquidity void. This is a void. See this point? See this place? So this candle, the whole movement here, this is 1 hour candle. The whole movement there is called liquidity void, and it's a gap too. So it's a fair value gap. So when you hear about fair value gap, it's not difficult. So every fair value gap form around another block tend to be stronger down. Then which one is stronger again? If I want to buy or sell, a fair value gap that form inside premium or discount, they are stronger than the one that form outside premium and discount. So these are very important things. I've done all of this training on the 90 days challenge, fair value gap. There's another training I've done not long, and I typed it. Most of us didn't read it anyway. So that's what it is. So that means gold as it is, except otherwise, if you take out this high, then we return. If not, where we are now, can you see now when I told us that this is a liquidity? And so that means for the buy, for anyone who bought in the morning, right? I did a video in the morning. Anyone who bought in the morning after taking the TP1, I was not going to shake myself until I would take my, what's it called? The next trailing, not touching it. You see, traveling. So that means I'm waiting for rejection in this zone now. If there are no rejection, if this one is taken out, retest this. That means with a new buy will come in, and then you invalidated this. All right. So that is the basic thing about your market. So fair value gap, all of those things. Don't cram them. They are simple to identify. So either in low, especially on higher time frame, make more sense. So we have told you entry model must confirm 3 candle close, and it makes sense. If you check it, you see that markets repeat both on a higher time frame and a lower time frame. It actually come with all of those swing point and 3 candle close, which is called power of 3. Does that make sense? All right, so I think we have done Nobu today. And so tomorrow, no, sorry, I said tomorrow, on the Wednesday, 12 noon again, we continue from where we stopped. I told you like Bitcoin was going to continue to buy, even when it didn't give you a buy signal, true support, strong, whatever, is still printing and all of that. So Bitcoin is still printing. If you take out this resistance, ahead, you continue. I think about 94,000 was what I'm talking about. I was talking about 94,000 for Bitcoin or something like that. I think, yeah, look at it up here. Yeah, $98,000. Okay. So if you take out this liquidity and then get respected, $98,000. So we have more support than resistance now. 1, 2, resist support. Sorry about that. I didn't say I want to. Oh, okay, sorry. Stop playing. I'm not leaving. Leave. Okay. So that's what it is, ladies and gentlemen, about the market. So Bitcoin, I've said, going up to this point, except for break that, so that was $108,000. That's going to make a lot of sense. And so you can see that your scanner printed this. You go to lower time frame, you're going to see the entry and all of that. So gold is still pushing up, it's still showing strength and power. You stay with gold alone, you make money. That's the truth. But to avoid unnecessary emotion you will have, so it's okay, align with some of those currency instrument so that you can swing those currency instrument and then scalp your what's it called? And scalp your gold, and then you can make more money as much as possible. All right. So thank you very much, everyone. I'm sure Noble, this is Noble. Now, for those of you leaders that you said we're going to be having very important meeting by 3 p.m. I've seen today is loaded for me, but it's just important. It's just very important. It's just very important. All right. So thank you. I hope value was gotten. So on Wednesday, so let's come. We're coming. Please, if you know you have not, if you don't have a broker you are trading with. So our major broker for personal trading is Capital Extend and Well Trade. And a beginner, please, a beginner, let me tell you this, a beginner that no, you don't have much money, instead of trading demo, please open a micro account and fund your account so that you can trade gold. Stop trading demo. Open micro account, put in $100 there, $50 there. So you're able to trade, you practice, and then so when you know what you are practicing, it's going to yield something. I think it make more sense. So open a micro account and then you can start. So for proper learning, and that learning can be more productive than just let me do demo. That demo, you may not really be serious about it. All right. Okay, so I think we have done Noble tonight, this morning, afternoon, and it's enough training. So I'm going to record it. For people who don't know the value, will not watch it, but you that know the value, you discover that you that come with the want to be anxious of watching it as much as possible. All right, thank you very much. Have a nice day. On this episode, so we meet on Wednesday again at 12 noon. Very, very important. And then if you're in Port Harcourt, we do training, live physical trading, 11 a.m., right? GMT +1 at the office number 49, Odaba Road. And then that's a very nice one for us there. So go and practice. I'm going to upload it because of us. I'll upload it right now so that you can have access to it. And then you want to go through it as much as possible. All right, make sense? Thank you. Have a nice day.